Hey, this is Daryl, and welcome to this video. I want to talk a little bit about the volatility index and something you should be aware of as a stock and option investor, and how to use it or just to have it as a resource. So let's go ahead and jump in. Okay, so I want to give you a little bit of some background first, and then I'll go to a chart to actually take a look at the VIX. You often hear the VIX, that's VIX, and it originated from the CBOE. A lot of acronyms here. The CBOE is the Chicago Board of Trade Option Exchange. So let's go ahead and take a look at this. Now, by the way, you can do more research on the VIX. I don't want to go too far in the weeds, but just wanted to share a little bit with it, just so you have some understanding. Maybe you're not even aware of it as a stock and option investor. Maybe you heard about it. So just maybe put this in front of you as a resource you can definitely use. So I just got some bullet points here. It is first of all, it's a real-time market index that will represent kind of looking forward, the 30-day forward volatility, kind of the forecast of what's going on, right? So this is what's happening is it's options that are being traded on the S&P 500, okay? So that's an indicator of the mood, so to speak, of all the investors out there that are doing these options and trades on the 500 largest companies, and what they're anticipating in the future. And we'll take a look at that. But once again, it's all about that volatility, the buying and selling, what's going on in between these options, looking forward 30 days in advance. Okay, so it kind of gives you a sneak peek of what you might be expecting with the price changes of the markets and stocks and options. As I already mentioned, it's derived from the price inputs of the S&P 500 index options, and it provides a measure of the risk, market risk, and the investors' sentiments. How are they feeling about what's going on in the world? What are the issues, or what's the unknown? I mean, these are variables that are always changing, never really static or steady. There's always some change going on. This VIX is also known as the fear gauge or the fear index. So investors, portfolio managers, they're looking at the VIX, the values, as a way, like I said, to measure the market risk, right? Fear and stress before they take any sort of decisions on it. So that's how it can be really helpful. Let's just jump on over. Let's take a look at the actual VIX at a chart. All right, so here is the VIX. Depending on what platform you're using, you can that's the symbol, that's the ticker symbol you can take a look at. And I think this is really interesting, especially if you're looking at it over a certain time horizon. You can see right here, this is going back, well, let's see, this is hard to see right here, 2018. I don't know what was going on in 2018, earlier part of the year, but something was going on, because you can see a big spike in the VIX, how it jumped up, but then it came right back down. So I'm just looking at dates. It looks like, let's call it really February 2nd to, maybe a week's, maybe 5 to 7 trading days possibly, of something going on in the world and the markets that had a big spike right there. So you can kind of look at these different times. And I'm looking at the bottom here, giving me these dates. So this is actually this chart I'm looking at. I believe it's let's find out. What is it? It's a 4-year. All right, so it's a 4-year view. So quite a bit of it's quite a bit of data, quite a bit of time right there. Now, something that's a little bit closer to home, if we go back to February, early March of 2020, we know exactly what was happening, right? This unknown virus was becoming a pandemic called COVID, the coronavirus. And there was just a lot of unknown what that was going to be to our health, to our economy, to us as a whole, globe. So there was a lot of, it was a huge spike. I mean, the VIX went up to 85. This is going back, March 19th. I think March 23rd was the low point for the markets as they were obviously dropping due to a lot of trading, a lot of selling, a lot of fear, a lot of unknown in a very short amount of time. But then things calmed down, so going into the springtime. And it's interesting. Just look at, if you had these dates in front of you, like June, what was going on in June? Maybe obviously the whole COVID was the main theme, but was there a surge? Was there a delay on the vaccinations? Any news, any fear, any scare? Once again, that's what this index is doing. Remember, it's all about that fear. It's about the market risk that looking forward, what investors are anticipating and seeing. So anyways, this is the VIX, VIX. You can use it. It's just let it be a tool to give you a feel for the higher the index is going, the more fear and risk that investors, portfolio managers, research analysts are foreseeing in the near future, maybe over the next 30 days or so. So something's around the corner. Nobody has a crystal ball. But it's just good to know that if you're taking a position in a stock and all of a sudden the VIX is climbing, you might see your stock make a lot of movement. This is an important tool also for the options market. The more the volatility, depending on what option strategy you're using, you might want to see more volatility. That might play, better to your specific strategy you have. But this is just something good to take a look at, depending on what strategy you're using, or just to understand that if seems to be a lot of more price movement going on, you might have been able to see that coming as you're, taking a look at the VIX. So I use it just as, once again, what's going on, what's the temperament, what are people foreseeing in the future as we move forward? You can see in the present moment right here, early in 2021, it's, of course it's no pun intended, but the VIX is going to be some volatility. It's going to be up and down all the time. But just as you look at it as a time frame that's a little bit longer than one day or a week, you can see it's at 22. I've seen different things where if it's below that 25 mark, maybe things appear to be a little more calm in the next 30 days or so. And then maybe if it's getting over the 25, it could be a little bit of a more volatile, bumpy road in the next 30 days. So once again, depending on your strategies with stocks and options, the VIX is a great tool to help you. All right. Hey, if you want to know more, I have videos going over a paper money account, making real decisions on, these are phantom positions and paper. But if you want to follow that and just learn more about different strategies with options and stocks, love to have you join. You subscribe to my channel, and when I upload, and once in a while, as I'm foreseeing in the future, I'll do some live YouTubes like this, videos, and you can ask questions. All right. So this is good for if you're a beginner, if you're somebody who wants to learn more about stocks and more about options for a beginner and get your money working for you. Subscribe, and let's roll our sleeves up and learn, experience, and start making the money we're working hard for work for us. All right. Go ahead and subscribe to my channel, and I look forward to seeing you in my next video.